$200. That number keeps appearing everywhere you look right now. Financial analysts are mentioning it. Hedge fund managers are whispering about it. Mining executives are projecting it. Social media is buzzing with it. And I have to tell you, when I first started hearing this $200 silver price target being discussed in serious financial circles, I wasn't surprised. Not because the number is outlandish or sensational, but because the math has been pointing there for years. Today, I'm going to explain exactly why this specific number, $200 per ounce, is suddenly on everyone's lips, why it's not just hype or fantasy, and why understanding the reasoning behind it could be the most important financial insight you receive this year. Let me be direct with you from the start. $200 silver is not only possible. When you understand the forces at play, it starts to look almost inevitable. And I don't say that to generate clicks or excitement. I say it because I've spent decades studying monetary history, precious metals markets, and macroeconomic cycles. What I see forming right now is a convergence of factors that makes $200 silver one of the most mathematically justified price targets in the entire commodity complex. Small investors must watch this very carefully because the opportunity sitting in front of you is massive, and most people simply don't understand the forces that are about to drive silver to levels that will shock the mainstream financial world. So, where does this $200 number actually come from? Let's start with the most compelling argument: inflation adjustment. In January 1980, silver reached $50 per ounce. That wasn't some arbitrary number. It represented a genuine price discovery moment when monetary chaos, geopolitical instability, and investment demand converged. Now, here's what most people don't understand. If you adjust that 1980 high for inflation, real inflation, not the manipulated numbers the government publishes, you get a price target somewhere between $200 and $300 per ounce. This isn't speculation. This is basic math. The purchasing power of the dollar has declined so dramatically over the past 45 years that $50 in 1980 is equivalent to well over $200 today. But here's what makes the current situation even more explosive than 1980. Back then, silver was primarily a monetary metal. Yes, there was industrial demand, but it was a fraction of what exists today. In 1980, there was no solar industry consuming hundreds of millions of ounces annually. There were no electric vehicles requiring significantly more silver than traditional automobiles. There was no smartphone in every pocket, no server farms powering the internet, no 5G infrastructure being built across the globe. The industrial demand profile for silver in 2024 is fundamentally different from 1980, and this changes everything about how we should think about price targets. You need to understand this critical point. Silver is no longer just a precious metal. It has become an essential industrial commodity that cannot be substituted in many high-tech applications. The solar industry alone is projected to consume over 200 million ounces of silver annually within the next few years. Electric vehicle production is ramping up exponentially, and each EV contains roughly twice as much silver as a conventional vehicle. The green energy transition that governments worldwide are mandating requires silver. Lots of it. And here's the kicker. While demand is exploding higher, mining production has remained essentially flat for years. The deficit between supply and demand is widening every single year, and above-ground inventories are being depleted to fill the gap. This supply-demand imbalance is precisely why the $200 target is appearing in serious financial analysis. When you project current consumption trends forward, when you account for the depletion of existing inventories, when you factor in the decades-long underinvestment in silver mining exploration and development, the price must rise dramatically to balance the market. $200 is not a ceiling. It's a rebalancing point. It's the price level where supply and demand might finally reach equilibrium, where recycling becomes economically viable on a massive scale, where new mining projects become profitable enough to attract investment. Now, let me explain the monetary dimension because this is where my perspective becomes critically important. The Federal Reserve and other central banks around the world have created more money in the last 15 years than in all of previous human history combined. Think about that for a moment. The monetary base has been expanded so dramatically that the purchasing power of fiat currencies is being systematically destroyed. The dollar you hold today buys roughly 70% of what it bought just 4 years ago. This isn't a temporary phenomenon. It's the inevitable consequence of the monetary policies that governments have adopted. When you understand that fiat currencies are being debased at an accelerating rate, the $200 silver target starts to look conservative. I'm not talking about silver becoming more valuable in real terms. I'm talking about dollars becoming less valuable. When you price silver in a depreciating currency, the nominal price must rise to maintain purchasing power parity. At the current rate of monetary expansion, $200 silver could arrive not because silver has become extraordinarily valuable, but because the dollar has become extraordinarily worthless. This is a critical distinction that most investors fail to grasp. The gold-to-silver ratio provides another compelling path to $200 silver. This ratio measures how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has averaged around 40-1 to 50-1 over long periods. During previous precious metals bull markets, it has compressed to 30-1, 20-1, even 16-1 in 1980. Today, the ratio sits well above 80-1. This tells us that silver is extremely undervalued relative to gold. If gold rises to $5,000, which many analysts consider likely given current monetary conditions, and the ratio compresses to even 40-1, silver would need to reach $125. If the ratio compresses further to 30-1, we're looking at $166. At 20-1, we hit $250. Do you see how the math keeps pointing to the same range? Whether we approach the analysis through inflation adjustment, supply-demand fundamentals, monetary debasement, or gold-silver ratio mean reversion, we keep arriving at prices between $150 and $250. This is not coincidence. This is not wishful thinking. This is multiple independent analytical frameworks converging on the same conclusion. And when multiple indicators point in the same direction, prudent investors pay attention. The top 0.1% of precious metals investors understand something that the masses don't. Silver is the most asymmetric opportunity in the financial markets today. The downside is limited. We're talking about a metal that has been used as money for 5,000 years, that has irreplaceable industrial applications, and that is becoming increasingly scarce. The upside potential is measured in multiples, not percentages. If you see what I see, you understand that owning silver at current prices is like buying a lottery ticket where you already know the winning numbers. I want to address the skeptics directly because I know what they're thinking. They're saying $200 is crazy. It's unrealistic. It could never happen. These are the same people who said gold would never reach $1,000. Then they said it would never reach $2,000. Now it's trading above $2,400, and they're still making excuses for why they didn't buy when they had the chance. The same pattern is going to play out with silver, and the same people are going to be left behind. Here's what the skeptics don't understand. Markets don't move in straight lines to fair value. They overshoot. They become irrational. They go parabolic when decades of suppressed energy finally release. Silver has been constrained by paper market manipulation, by decades of underinvestment in mining, by institutional neglect. When those constraints break, and they always break eventually, the move is violent and sudden. The $200 target isn't a gradual climb over decades. It's likely to happen in a compressed time frame that will leave most investors scrambling to get positioned after the move has already begun. The COMEX situation deserves special attention here. The registered silver inventory, the metal actually available for delivery, has collapsed to levels that would have seemed impossible just a few years ago. The ratio of paper claims to physical metal has reached absurd proportions. When this paper structure eventually fails, and it will fail because it mathematically must fail, the rush to secure physical metal will be unlike anything we've witnessed. The $200 target in that scenario might prove to be just a waypoint on the journey to even higher prices. For small investors watching this, I want to emphasize something crucial. You have an advantage right now that you won't have later. The silver market is small enough that individual investors can still accumulate meaningful positions. You can walk into a coin shop today and buy silver at reasonable premiums. You can order from online dealers and receive physical metal within days. This accessibility will not last forever. When institutions decide they need silver exposure, when sovereign wealth funds realize they're missing a critical asset class, when pension funds wake up to the inflation protection they desperately need, retail availability will evaporate overnight. The behavioral aspect of this opportunity fascinates me. Most investors are psychologically incapable of buying assets before they've proven themselves. They need confirmation. They need social proof. They need to see a trend before they believe in it. This is precisely why most investors miss the biggest moves. They wait for evidence that only appears after the opportunity has largely passed. The $200 target seems unrealistic to them today because silver is trading below $40. But when silver is at $150, these same people will be certain it's going to $200. That's when they'll buy near the top of the move, locking in minimal gains instead of the life-changing returns that were available to those who acted with foresight. I've been in this business long enough to recognize a generational setup when I see one. The last time silver offered this kind of opportunity was the late 1970s. Those who bought then saw their wealth multiply many times over in just a few years. The next generation of silver millionaires is being created right now, in this moment, by investors who have the courage to act on their analysis rather than waiting for permission from mainstream financial media. The talking heads on CNBC won't tell you to buy silver until it's already at $200. By then, the opportunity will have passed. Let me give you a framework for thinking about this opportunity. If silver reaches $200, and I've just explained multiple analytical paths that lead there, we're talking about a 5 to 6 times return from current prices. A $10,000 investment becomes $50,000 to $60,000. $100,000 becomes $500,000. For the top stackers who have been accumulating for years, who have hundreds of thousands or millions of dollars in physical silver, we're talking about wealth generation that transforms family fortunes for generations. This is not hyperbole. This is the mathematical reality of what a move to $200 represents. The question you need to ask yourself is simple. Can I afford to be wrong about this? If I'm wrong and silver doesn't reach $200, what have you lost by owning a tangible asset with intrinsic value? Maybe it only doubles or triples. Maybe it takes longer than expected. Those are the downside scenarios. But if I'm right, if the math I've outlined actually plays out, missing this opportunity would be a financial regret that haunts you for the rest of your life. The asymmetry of this proposition is so favorable that it demands serious consideration from anyone who cares about their financial future. The strategic approach is straightforward. Accumulate physical silver consistently. Don't try to time the exact bottom or predict short-term fluctuations. Build your position methodically over time. Focus on recognized coins and bars from reputable mints. Store a portion in your personal possession and consider allocated storage options for larger holdings. Complement your physical position with carefully selected mining stocks that offer leveraged exposure to silver price increases. Avoid the paper products, the ETFs and futures contracts that have been used to manipulate prices and may not perform when you need them most. The industrial demand factor is going to become increasingly visible over the next few years. Solar installations are accelerating globally as countries race to meet climate commitments. Electric vehicle adoption is reaching an inflection point where growth becomes exponential. Artificial intelligence infrastructure requires massive amounts of silver for connections and components. Every single one of these trends is bullish for silver demand, and none of them are going away. The world is becoming more electrified, more connected, more dependent on the technologies that require silver. This is a secular trend that will drive demand higher for decades. Meanwhile, the supply side faces structural challenges that cannot be quickly resolved. Silver mine production has been essentially flat for years. Most silver is produced as a byproduct of copper, lead, and zinc mining, which means supply cannot easily increase in response to higher prices. New mines take a decade or more to develop from discovery to production. Even if silver prices doubled tomorrow, meaningful new supply wouldn't reach the market for years. This supply inelasticity is why price must do the heavy lifting of balancing the market. $200 silver might be the price required to incentivize the recycling and substitution necessary to meet demand. I want to be very clear about the timeline here because I know people are impatient. I cannot tell you exactly when silver will reach $200. It might happen in 2026. It might happen in 2027 or 2028. These things unfold according to their own logic, driven by events and catalysts that are impossible to predict with precision. What I can tell you is that the fundamentals supporting this move are in place right now. The fuse has been lit. The only question is how long it takes to reach the powder keg. Trying to time this perfectly is a fool's errand. Being positioned before the move is what matters. The catalyst could come from anywhere. A major bank failure that triggers safe haven buying, a geopolitical crisis that disrupts supply chains, a COMEX delivery failure that exposes the paper manipulation, a sudden surge in solar or EV demand that drains remaining inventories, an inflation spike that sends investors scrambling for protection. Any one of these events could trigger the move, and several of them could easily occur simultaneously, creating a price spike that makes $200 happen in months rather than years. For those who have been following my work for years, you know that I don't make these kinds of predictions lightly. I warned about the 2008 financial crisis before it happened. I predicted the inflation that materialized in 2021 and 2022. I've been right about gold when most of Wall Street was dismissive. My track record isn't perfect. No one's is. But I've been on the right side of major macroeconomic trends consistently. And I'm telling you now, with the same conviction I had about those previous calls, silver to $200 is not only possible, it's probable. And it's going to happen faster than most people expect. The $200 figure is suddenly everywhere because the evidence has become impossible to ignore. The analysts doing honest work are reaching the same conclusions. The insiders who understand supply and demand dynamics are positioning accordingly. The smart money is accumulating while the mainstream remains distracted by meme stocks and cryptocurrencies. This is how major moves begin, with quiet accumulation by those who understand, followed by a sudden awakening of the masses that drives prices to levels that seemed impossible just months before. If you see what I see, the path forward is clear. Accumulate silver now, while it's still accessible and affordable. Build a position that will matter when prices reach the targets I've outlined. Don't wait for confirmation from sources that have been wrong about precious metals for decades. Don't let normalcy bias convince you that current prices will persist indefinitely. The $200 target is not just a number being thrown around for shock value. It's the destination that multiple independent analyses are pointing toward, and the only question is whether you'll be positioned to benefit when we arrive. The window of opportunity is open today. It will not remain open forever. Every week that passes, every ounce of silver consumed by industry, every dollar created by central banks, every day of inventory depletion, all of these factors are moving us closer to the moment when prices break out of their current range and begin the journey toward fair value. $200 is where fair value lives. The current price represents a temporary mispricing that will be corrected, probably violently, probably soon. Position yourself accordingly, and $200 silver will transform your financial future rather than being just another opportunity you watch pass by. The number is everywhere now for a reason. Don't ignore what it's telling you.